On today's World Insight with Tian Wei, the Dow Jones surged back after Trump assured the Fed of his support. How influential is the president's Twitter over the stock market? And with Brexit just 3 months away, the former Advocate General for Scotland uncovers the fine details in the divorce bill.
Hello and welcome to World Insight with me, Tian Wei. The program is coming to you live from Beijing on CGTN. It has been a roller coaster holiday on Wall Street. The day after Christmas Day, the Dow Jones Industrial Average surged more than 1,000 points for the very first time. This came after Dow Jones plunged to its worst December since the Great Depression. The stock market, however, is not the economy, and the U.S. Federal Reserve says that the American economy will continue to grow strong.
After increasing the federal funds rate by 1/4 percentage point to a range of between 2.25% and 2.5%, the Federal Reserve forecasts continued strong U.S. growth and a healthy jobs market in 2019. But Chairman Jerome Powell also notes a change in the national mood.
Despite this robust economic backdrop and our expectation for healthy growth, we have seen developments that may signal some softening relative to what we were expecting a few months ago. Growth in other economies around the world has moderated somewhat over the course of 2018, albeit to still solid levels.
U.S. financial markets fell sharply after the rate announcement, which included a projection from members of the Federal Open Market Committee of 2 more quarter-point rises next year. President Trump has urged the Fed to ignore financial data and not to raise rates any further based on a feeling about the economy.
Political considerations play no role whatsoever in our discussions or decisions about monetary policy. We have the tools to carry it about. We have the independence, which we think is essential to be able to do our jobs in a non-political way. And we at the Fed are absolutely committed to that mission, and nothing will deter us from doing what we think is the right thing to do.
So Jerome Powell acknowledges a mood of uncertainty, which he calls angst, but says any decisions will still be made based on analysis of economic data.
For more on the U.S. economy and its relations with the stock market, we have in our Beijing studio John Gong, professor from the University of International Business and Economics. In New York, we have Max Wolf, professor of economics from the New School University in the U.S. Welcome to both of you, gentlemen. Shall I say an early Happy New Year to both of you?
Thank you.
Certainly, the stock market has been quite dramatic at the end of the year 2018, isn't it, Professor Wolf? What's your takeaway from the drama over the past few days?
Sure. So great to be here, and happy holidays to you as well. Always a pleasure to join you. Look, I think what we've had here is an excessive confidence in both the U.S. economy and the U.S. market crashing pretty hard over the last 3 months into the realities of both the U.S. and global macroeconomic situation with the usual sort of steps. So one is the suspension of disbelief. We did that a long time. Then there's a sort of angry reckoning with the reality that creates a lot of volatility. And then there's the beginning of probably a slower grind downward. But that grind downward began with sort of fantastic slides. And across most of last week, there was a story of pretty massive sell-offs, and then we got a big pop on a very low volume day. And what that means is people saw an opportunity to make a little bit of more money to sort of make the year and the quarter look better when there weren't too many people in the market, and there was some short covering or people trying to get out of positions that looked like they had done about as much as they could do. And I would urge people not to look at one day and forecast too much about the future off one day.
Right. Over the past few days, Professor Gong from Beijing, we heard the stock analysts in the U.S. are persuading people to buy because this is what they consider as the best time to buy when the prices are really low. And some explain, as Professor Wolf did, this rebound. It's a very interesting separate case. Our program is not about just the stock market, but it's more than that. What does this emotional roller coaster, shall we say, which is quite often if you look at the stock market for a long time. But at this time, how should we understand this, Professor Gong?
I would add a technical interpretation of the stock market performance. I mean, if you look at the Dow Jones index over the last 10 years, starting from 2009, this has been a very powerful bull market run-up. It has an increase from 8,000 points up all the way to 25,000 more. On average, that's about 12% a year annualized growth rate. So this is actually a very decent performance, and it's probably one of the longest bull markets ever in American history. So it's not surprising at this point that we are seeing a sort of a top formation pattern now. I think throughout 2018 it has been a correction, is at the top forming pattern, and now it's going back to a correction mode. And I think from a technical perspective, I don't think the bottom has we have seen the bottom yet. We're probably going to see sort of trading sideways or maybe even further dipping in the next few weeks or so. I think I wouldn't advise people to buy at this point. I think, but aside from all this, I think the news certainly are driving this as well. I mean, the behavior of this president, and look at the fundamentals of the U.S. economy. We're starting to see things slowing down. So
what about the fundamentals of the economy, Professor Wall, from your perspective? Of course, there has been a lot of administrative measures through tax cuts and some of the other ways earlier in order to boost the economy, and that is why also when it's coupled up with some of the major policies adopted earlier with this upswing of the U.S. economy, things are very good. But in 2019, will that boom continue? Will the jobs continue to be created? That's certainly an interesting question mark. Professor.
Yeah, absolutely. Look, I think we did a lot of short-term policies that worked very well for 6 to 18 months, and we've sort of begun to see the air come out of that balloon already. I don't think 2019 will be so good. The tax cuts weren't paid for. We're going to run a $1 trillion deficit this year. And the truth is that American businesses didn't reinvest as much of that money from the tax cuts as we had hoped in building up their productive capacity here in the U.S. They did some, which was good, but probably not enough. And what everyone clings to here is the information around employment, which is certainly good news, and new jobless claims. What everyone forgets is that our economy has shifted from one defined by traditional work, which we still measure, to one defined by independent contractor status, which we don't measure. So we celebrate this whole new economy, but we still only measure the old one. And I think we're going to see the folly of that when this economy, both on a look-back basis and a look-forward 2019 basis, turn out to be quite a bit less strong than has been discussed and agreed.
Professor Gong, of course, the U.S. economy is always one of the most important factors in the global economy. Now, when you see, as Professor Wolf analyzed, the possible consequences of the current policy 2019, how is it likely to feed to the reactions of the other economies, China included, which is now, right now, in the apparent trade war with the U.S.?
I think from a global perspective, I think the United States economy is still relatively strong. I mean, the fundamentals are still fairly robust, but we're starting to see signs of strain in many emerging economies, especially as a consequence of the Fed raising the interest rate and the dollar getting stronger. And the World Bank has come out warning that this bull market is getting to the towards the end of the very long bull market run-up, and we are starting to get into a recession. So these are very cautionary notes, but relatively speaking, the U.S. economy is still relatively much better than other economies with its employment figures and with its overall GDP growth compared to other time. It's still
as you earlier analyzed already, Professor. Now we are also joined by Christopher Versace, who is a portfolio manager from the streets, Trifecta Stocks. Welcome, sir, to our program as well. One of the interesting things people have been debating about is the relationship between the heads of state and the Federal Reserve chairman. I understand in legal terms there has been some very vague description as to what exactly their relationship is, particularly whether the president should give order to the Federal Reserve Chairman, the central bank chairman. Mr. Versace, from those who are working on the Wall Street, what do you make of the current debate?
Well, there really isn't much of a debate. I mean, the Fed chairman is independent of the president. And I think what you're referring to is some of the speculation, most notably reported by Bloomberg, that President Trump was talking about not being very happy with Fed Chairman Jay Powell. What we've seen over the last couple of days is the White House actually dispel that notion. I think the issue really stems from the fact
that... Did the White House dispel that notion? Did the White House dispel that notion, or did the Treasury Secretary dispel that notion, despite of the fact he also suggested that the president was not happy with the Federal Reserve Chairman's attitude and measures so far? So that's a difference.
Well, remember, the report over the displeasure came from Bloomberg, and yes, the Secretary of Treasury came out saying that that was not the case. So, but the bigger issue here, though, is the rate at which the Fed is going to, if it plans to increase interest rates in 2019 as it tries to remain data dependent. Remember, they have reduced their expectations from 3 rate hikes in 2019 down to 2. The president, you know, just seeing the speed of the overall U.S. economy, is questioning the need for those 2 rate hikes. I think he would like something perhaps a little softer in order to help keep the current expansion underway. The one background on this is that the Federal Reserve has historically done a very good job of boosting interest rates into a recession. That doesn't mean we're expecting a recession next year, but we are seeing signs of slower growth. That, I think, is what has the president alarmed.
Professor Wolf, correct me if I'm wrong. Since 2005 until now, the Federal Reserve has been raising interest rates to about 9 times. Is that the right number? And this year, of course, certainly there has been some contribution to that overall volume. So, Professor Wolf, how do you look at the reactions of the economy from the Federal Reserve, and how do you see from the White House and also the central bank chairman, what's their exact relationship should be according to the definition?
Sure, so let me start with the relatively easier one. The chairperson of the Federal Reserve, now Jerome Powell, replaced by and picked by President Trump, has 2 mandates. One is to do everything possible to create an environment conducive to full employment, and number 2 is to manufacture and help to induce price stability. Those are, in fact, the only 2, and one of the successes of U.S. financial markets and the reasons for their depth and historic global prestige is the independence of the central bank. It is very counterproductive and quite a bit unusual, if in style, maybe not in substance, but in style, to have a president be so openly critical of his own recent selection, particularly in a moment of turmoil. So that's definitely an issue. We saw the U.S. Federal Reserve cut interest rates to extraordinary, both internationally and historically low rates in the 2008-2009 recession, sort of severe recession and market asset deflation fears, and then keep them there for about 10 years. Now we've seen multiple quarter-point rate hikes, but we're still way below any kind of international or historical norm for interest rates, still very low. And then just add one other thing, is probably the bigger policy instrument the Federal Reserve has is normalizing the balance sheet. People tend to forget that going into the 08-09 crisis, the Federal Reserve had an $800 billion balance sheet, which now sits at $3 trillion. And so normalizing that back down, selling another $2.5 trillion worth of assets, is actually a big challenge and could do more kind of tumult, could induce more tumult in the markets. But I do also think that at some point, if the economy is anywhere near as strong as most folks seem to think it is, we need to be able to have a functioning economy without massive, constant monetary stimulus. And what we're doing is trying to figure out how to do that. And what doesn't help is the overt undermining of the authority or creating nasty debates about the independence of the Federal Reserve in such a difficult context, because by any measure, Mr. Powell has a fairly challenging job right now.
Mr. Versace, if, according to the explanation of Professor Wolf, it seems that the mandate of both the heads of state of the United States and the chairman of the Federal Reserve in the long term actually are very similar, if not the same, with one another. So what exactly is the nature of the debate right now?
The nature of the debate is the speed at which the Fed is expected to increase interest rates in 2019. Again, if we look at the preponderance of economic data, not just in the U.S. but around the globe, we see the global economy slowing. Case in point, I believe November industrial profits in China fell year over year. This is the first time in 3 years.
Right.
If we look at a lot of the IHS market data, particularly flash PMI data for December, we see across the board slower order growth, slower backlog growth.
That's well understood.
Indicating that, yes, the recent bout of data continues to point to a slowing. So the real crux of the question is, what is the right speed at which the Federal Reserve should be boosting interest rates? And at the same time, the current expansion is fairly long in the tooth, and the Fed is most likely trying to get as many monetary policy tools back in their toolbox for the next eventual recession, depending on when that happens. And there are some out there, according to CFO Magazine and Duke University, that we could see signs of a recession as early as the fourth quarter of 2019, perhaps in 2020.
Yeah.
So we have a little bit of a time game here while the economy slows. So it's a question of how much can the Fed do without sabotaging the current speed of the economy and tossing it into a recession.
That is certainly a very logical and reasonable debate. As far as I'm reading over the past few days, most of the analysts are suggesting about a difficult year possibly in 2020, even though the U.S. economy could escape possibly a difficult time in the year 2019. Having said that, though, Professor Wolf, I want to have a question for you as well regarding that when a Federal Reserve chairman is trying to make his decisions about interest, about the hikes or not, the rates adjustment or not, who should he consult? Is there a procedure with which he will make his decision? How people should accept his decision, including different economic organizations, departments, related, personnel, including the president. What exactly is, according to the book?
Yes, so generally speaking, there's supposed to be a lot of conference and discussion inside the Federal Reserve, which has a large staff of some of the most talented and qualified economists available. Also, there's 12 governors, so it's not a single individual who makes the decisions, although it's a single individual who often announces them and is either credited or critiqued with those decisions. But we can see the entire 7-person voting group. We can see the consult, all the economists, and it's a model-driven process. And I think Chairman Powell's been pretty good about trying to point to that, which is it's not really his opinion about the economy or Janet Yellen, his predecessor, or whomsoever serves next. It's really about reading an incredible amount of data into an organization full of technical expertise and letting that model drive your decision-making process. There is, of course, a little bit of art in the science, and that may be where the debate is largely centered. But we also need the Federal Reserve to both really be, and certainly to be perceived to be independent, for us to maintain our position as the deepest, most liquid home of capital markets in the world. And so there's also a long-term macroeconomic importance to the U.S. here that we should mention that's enormously important.
Professor Gong here in Beijing, the most well-known quote coming from any Federal Reserve chairman we could remember is probably from Mr. Alan Greenspan. The so-called rational exuberance phrase has been flying in the air for quite some decades, shall we say. Having said that, though, he does learn his lesson in making the economy as so-called prosperous as it could be, letting it go with its own speed. But obviously, eventually, it has to be adjusted. But it was a little bit too late for his term. So, Professor Gong, when you are looking at the job of Federal Reserve Chairman, how cool-minded this person has to be, and how much he really has to shoulder the responsibility in order for a good economy?
I think the role of Fed is especially prominent during times of economic downturns and upturns. When it comes to upturns, very cautionary about inflationary pressure. When it's in a downturn, you want to boost the economy. So it's really during these times that the Fed's role becomes very prominent. Now, back to the question about the relationship between Donald Trump and the Fed. I think, even though, my opinion is, even though Fed is supposed to work independently, and I think President Trump understands that, but he's still, this is not the first time he's exerting pressure on the Fed chairman. He's been saying this, there shouldn't be a raise of interest rate again, several times in the past. And I think he's doing this deliberately. He's trying to influence the Fed's
That's exactly the issue, isn't it?
Right. He's trying to exert some political pressure here. He doesn't care about anything beyond 2020. I think his time horizon is very short.
Right.
He's targeting the election. He wants the economy to perform well within his time frame.
Right.
But Fed's job is very different. They have a much longer time horizon.
Right. Before we go, how should we see it? The others' economy, what kind of attitude and what is the perception they can look at the debate now going on in the U.S. between the President and Federal Reserve Chairman and the direction of the U.S. economy? One sentence or two from every one of you, if we can, gentlemen. Mr. Versace first.
I think that we're seeing a big reset on expectations for the economy, both in terms of GDP growth as well as corporate earnings growth. And I think that, as we head into 2019, for U.S. investors, is the big question as we get to what is the real speed of the economy, what is the real speed of earnings growth. And I think that will be the influence over the market over the next couple of months as we get through December quarter earnings.
Professor Wolf, one or two sentences, please.
Yeah, so I think the two big lessons that we're starting to learn under some duress here are the whole rest of the world does matter, and that things are a little bit less good than we thought, still pretty good, less good than we thought, and we need to prepare ourselves to be more long-term minded and more globalization integrated to go forward into 2019-2020 with the best possible economic security.
Professor Gong, last but not least.
I think we're entering a very critical time that the world economy is starting to see signs of recession. I think it's the time for President Trump to wrap this trade war. Let's reach an agreement with China and move on. This is a very bad time to continue this unnecessary and totally unwarranted war.
Well, with that call for peace, I guess we wrap up for this round of discussion. I want to thank the three of you gentlemen for being with us during the holiday season. John Gong, Max Wolf, Christopher Versace, really appreciate it. Thank you so much. Have a great 2019. Thank you.
Thank you.
Stay with us here on World Insight with me, Tian Wei. Still to come on the program. With Brexit just 3 months away, I speak to the former Advocate General for Scotland to uncover the fine details in the so-called divorce bill. Welcome back. You're still watching World Insight with me, Tian Wei. The UK has been on a slow roller coaster since voting to leave the European Union more than 2 years ago. But the long process seems to be entering its final stage. The EU has adopted backup plans in case Britain leaves without a deal. The move aims to protect air transportation and financial markets. The bloc promised that British citizens living in Europe will keep their residency rights if the UK reciprocates. Meanwhile, the British government is also preparing for a no-deal Brexit, despite major business groups warning that a no-deal divorce would mean disastrous result for the British economy. Earlier, Prime Minister Theresa May struck a deal with the EU, but the Parliament opposed it. May is now still trying to get the EU concessions to win support.
We will set out what is achieved in our EU discussions when we return in the new year, when we have had those discussions, when we bring those assurances back.
British politicians will return in the new year and start the whole thing all over again, nearer than March deadlines. A deal, no deal, a referendum, an election, a delay, a cancellation, these are all possibilities as the clock ticks down to Brexit. Earlier, on the sideline of the Understanding China International Conference, I sat down with Lord Neil Davison, the former Advocate General for Scotland, to get his insights about Brexit. Brexit. And that is a reality that the UK has to face. Right now, people say it is coming into the stage of parliamentary politics.
Yeah.
How is that likely to be debated and worked out, if ever?
Well, I think your point, if ever, is the real question. This is a result of one political miscalculation heaped on another political miscalculation. And we're in a position that can only be described as a mess. There isn't any clear way through in the Parliament. There are a number of possibilities that are being ventilated, but the clock is ticking. We're meant to be out of the EU on the 29th of March next year, and nobody knows where we're going.
But you're not coming from the ruling party, so you can say all of these things. But
true.
The question is, what's next? Isn't it March is not that far away from all of us?
Well, you're quite right that I'm not in the ruling party. That's the party that has made all these political miscalculations. But the Labour Party has to find its own way through all this. What we do as an opposition in our system is hold the government to account. Now, we've got various ideas of how the future could look. If we could get another renegotiation with the EU, that would work. But that looks pretty unlikely, certainly in the time frame. There's a possibility of revoking the actual application to leave. That can be done unilaterally by the UK. And of course, there's the idea of a referendum. But you then look at the various ideas that are being put forward by parliamentarians. There's Norway, there's Canada. These are terms that are used to alternative possibilities. There's a whole range of them, and there's no clear way forward. All we've got is a Prime Minister who is stuck and can't move because her plan doesn't have parliamentary support.
Lately, she did have a vote about her existence, and it seems that she passed that test narrowly. Will that be able to, in a way, embolden her furthermore about what the steps that she wants to take?
I don't think it can embolden her. Her reaction, the only way she managed to get through that vote was by promising not to stand again as Prime Minister. So she's now a lame duck Prime Minister. That's not a great victory. And about a third of her party were not prepared to support her. This is certainly very bad for her. We, however, need a Prime Minister to guide us through this difficult area. The Conservative Party haven't produced an alternative Prime Minister, so it looks like a general election might be the best way to solve this.
If you talk about general election, what might be the time frame of this? But of course, the ruling party has to agree to this. There's another fight before all of these fights.
There is actually a statutory mechanism. If there is a no confidence vote that goes against the government, they then faced with pretty much a certainty of having to have a general election. And that would be one way forward. But the time frame, you're quite right, this is really squeezed. So I think that's why we have to either revoke the Article 50 application to leave the EU, or we have to find some way to push it back.
UK is also doing, in a way, a favor to the rest of the world with the mini deglobalization example of where and what is likely to be the case, which is enormous amount of chaos.
Yeah, I don't think anybody thinks that we're trying to do a deglobalization as an example to the rest of the world, or even for our own benefit. It may be the result of it, but the people who are the hardest people for leaving the EU, they want us to be a global Britain. That's their phrase. Global Britain, we will, instead of merely trading with the EU, we will trade with everybody. Nobody's really quite sure what that means, but that's what they say.
If you look at some of the most recent multilateral occasions, including the G20, the relevance of the UK, you could tell, is becoming diminishing as a result of the current political fight inside the country. But Lord Neil, you have an economy that has to be responsible for the population and the constituencies, and therefore, how can we see the UK way of dealing with the current issue, at least when it comes to economic and trade and supporting the social system, at least for now?
Well, what you identify there are the things that any government should be doing. And those are the priorities of any sensible, proper government. And that's just not what's happening. Now, I can keep telling you that this is a dysfunctional government, and you may actually believe me in this. But we have to get from where we are to some sensible place. And because this has all been caused by a referendum, another political miscalculation, we have to, I think, in all rational logic, eventually come to the idea of another referendum.
But while the UK is struggling with its own issue, you see the rest of the world also struggling with some common issues. For example, the future of globalization, for example, the future of multilateralism. For example, the current administration inside the United States, how the rest of the world should deal with it. After all, it's the biggest economy in the world, most influential player on the international stage. So, Lord Neil, when the UK is struggling with this identity, how does it see its relation, for example, with Washington? How does it see its relationship with other multilateral platforms besides the EU?
The way in which the UK has had a close relationship with the US historically is under tremendous strain. Obama seemed to ignore the UK, and that made a lot of people in the UK think about what is our relationship really going to be with the US. And then, of course, along comes Trump. And that causes a whole lot of other people to ask questions, what is this relationship we have? Now, it gets pulled two ways. There's one set thinks that we have to be very friendly with the Americans and go along with them in order that we can get a free trade agreement with them. Now, other people who say, well, the Americans have not really shown any particular protection of the UK interests. We've identified areas of problems. There's the steel tariffs. There's an entirely different approach to the Iran nuclear issue. There's the question of climate change. The US has unilaterally acted without any regard or without any consultation with the UK. This changes the whole relationship. But it gets worse than that. When we're looking to have a free trade agreement with China, for example, we also have the Royal Navy sending a frigate into the South China Sea. This is not in any shape or form in the UK's interest. One can see it is in some way trying to support a US approach to the South China Sea. But if we do that and then turn around to China and say, could we please have a really good free trade agreement, I suspect the Chinese people might be rather annoyed. Pointless provocation is not the way that we want to carry forward. We have to look closely at these relationships as the world is changing. And the old historical relationship of US-UK is not what it was.
Some Brexit proponents believe that the divorce bill with the EU will enhance bilateral ties across the world for the UK, amounting to a so-called global Britain. But in reality, Brexit has created uncertainty, many argue, between the UK and other countries like China and the US. Lord Neil Davison helps us uncover opportunities in China-UK ties despite the current difficulties. Take a listen.
I mean, China has made a tremendous contribution to global growth. And the process of globalization, it's not going to be rolled back. China is the world's second largest economy at the moment. It's going to get bigger. This is a fact. The idea that one can turn around and blame China is blaming the world. It's pointless. It's also unsound. And also, although there may be a temptation for certain political groups to do that, all that that does is create reaction, aggression, disappointment and difficulty. That's not what we want.
But that's sometimes how history changed.
Oh, you bet. So I think what's really important is for everyone to recognize, everybody of goodwill, to recognize that we should be working together, recognize that we are independent, interdependent, that we have a shared future, and that this is mankind really having to look forward. We've got all sorts of issues like climate change and so on to deal with. We need to cooperate. We need to find areas of cooperation and recognize our interdependence.
China and the UK has been in very strong conversations with one another in terms of Belt and Road Initiative.
Yeah.
But here in China, that sometimes this debate has been overshadowed by some of the perceptions others have about China. Once a tag named China is being put on a concept, suddenly these days it becomes a question.
Yeah.
So, Lord Neil, for the UK, what is your biggest interest in this regard? How can you be able to create opportunities for yourself, while at the same time to work with one of the biggest economies in the world, China, on this issue, and the others who are likely to be on board?
Again, it's finding areas of common interest. And you're quite right, when people see the word China in certain quarters, react. And the point is to make it clear that one's dealing with the world's second largest economy, getting bigger, that these are people who we, the UK, as a trading nation, have a really important interest in working with. We have to work with China. The more we can work with China, the better it will be for the UK. And if there are going to be difficulties in other relationships, well, let that be. We have to find our own way forward in the UK's interest. Ignoring the world's second largest economy isn't going to be the best way of doing it. And creating friction in that relationship is also an extremely bad idea.
Is there any way that you can deal with those people who are trying to create those frictions, chaos?
If it were down to me to deal with them, doubtless going around speaking to them and trying to explain the reality of the situation.
So communication is still the way?
Oh yeah, absolutely. I mean, we have nothing else. We can't go and bribe people. We can't go and throw them in jail. We have to carry out rational discussion. And some people are not rational. Well, we just have to deal with that.
Many believe what is going on right now will bring some of the parties ever closer with one another than they used to be. For example, China and the EU, or China and individual European economies, or the United States and other Asian economies in the Asia-Pacific region. Lord Neil, how do you see these new possibilities as a result of the change? But new possibilities usually are not necessarily working at the very beginning within a matured system or a matured practices, and therefore likely even to be more minor chaotic situation to begin with, but maybe later stream up. What do you make of this very beginning of all of these possibilities?
Well, I think it goes back again to communication. If these relationships are relatively new and there may be friction in those relationships, one has to recognize the importance of the relationship in the first place, find one way of dealing with friction, find a way of explaining why it is one is wanting to do one particular thing so that the common interests can be developed. There are always going to be difficulties in relations, whether it's between large blocks or on a bilateral basis. But the idea is to keep those areas of friction to a minimum and to identify the common interests.
China has been a new rising economy, 40 years only, from one of the least developed country to the second largest economy in the world. But at the same time, it creates uneasiness among those who do not know China very well and do not know necessarily where does it come from, that a country could eventually, in such a short speed, rise. Lord Neil, what do you make of this phenomenon? Can the world be able to understand China? Can China be able to understand the world more than skin deep?
My experience teaches me that China understands a lot more about the world than the rest of the world understands about China. I think people in various parts of the world are surprised by the speed, the pace of China's rise, and as a result of it have an element of fear. And this can cause the aggressive reactions, the lack of understanding, the seeing of China as a threat. And it's that kind of fear that one has to really remove by way of demonstrating where it is that the commonality of interests operates, that how China, with this rise, has not only produced a tremendous reduction in global poverty. The 700 million people in China lifted out of poverty is an amazing way forward. For people to realize that this is what China is doing, that China's history is not one of expansion, it's not one of aggression, it's one of a country that is simply recovering its position in history, that this is what is happening. This is not an attempt to take over the world or anything like that. The theories that are developed within China in relation to governance probably would be better explained to the rest of the world, and the rest of the world has to listen to them as well, to appreciate that China does not have aggressive intentions to disrupt the United States, to break down Europe. No, I mean, these are fantasies, but they can be real where they produce fear. They can have a real result. The fantasies are not real, but the result can be real. And that's why you get this bluster, this attack on China in certain quarters from time to time. But the main thing is, what is China doing? Look at the facts, the way in which China is growing, the way it's seeking to enter into relationships where it makes the world work, where it's stepping up to dealing with climate change, where it's looking to develop a shared humanity rather than a conqueror wanting to take over the world.
And that is all the time we have for today. If you'd like to see more, try to find us World Insight CGTN into your search engine or check out our YouTube channel. You can also follow us on Twitter, Facebook, and Sina Weibo. From me, Tian Wei, and everyone on the World Insight team, thanks for watching. Tune in again next time for insights across China and around the world. Good night.